Hello, good morning and welcome to Business Insight. I'm Adesoa Iromoseli. And you know, on Business Insight, we are all about business. And of course, right here at Souk News, we are all about business and economic development. Before we delve into what we have for today, we will join Alfreda with the business news update. Stay with us.
Good morning and welcome to Business Insight, where we bring you business news, updates on currency market trends, stocks, and commodity. I am Alfreda Ambe-Bassi. The Nigerian Sovereign Investment Authority, NSIA, has introduced the $500 million renewable investment platform for limitless energy ripple to enhance the country's renewable energy efforts. While $25 million has been committed to the project, the NSIA signed a Memorandum of Understanding MOU with the International Finance Corporation, IFC, to collaborate on strategic investments in the core focus areas of the platform. The Managing Director of NSIA, Aminu Umar Sadiq, expressed optimism about the impact of Ripple in expanding energy access and ensuring energy security. He noted that the Renewable Investments Platform for Limitless Energy Ripple is built on 3 pillars, which aims to address energy demands through diesel displacement, franchising, and backward integration towards photovoltaic system manufacturing. The pilot project, located in Takarawa Industrial Hub, Kano State, involves generating and distributing 70 megawatts of energy to industrial, commercial, and residential areas, as the focus on expanding beyond solar PV to include green hydrogen, waste-to-energy, mini-hydro, and wind projects. And Enugu State Governor Peter Mba has announced plans to construct over 250 smart schools across the 260 wards of the state within 14 months. The initiative aims to provide world-class education, particularly targeting the poorest children in the remote areas. Governor Mba emphasized the significance of education in elevating Enugu State's gross domestic product from $4.4 billion to $30 billion by 2031. Each smart school will feature internet access, solar power, modern ICT centers, robotics and artificial intelligence facilities, laboratories, creative production studios, and interactive digital whiteboards. He says the state has allocated 30% of its 2024 budget to education, and the first smart school has been completed, with contracts awarded for 9 more and an additional 250 in the pipeline. The governor also said that the global experts are training teachers for these model smart schools. And away from that, in a significant development, Saudi Aramco, one of the leading oil producers, has confirmed the discovery of 2 new natural gas fields in the Empty Quarter region. The Al Hiran gas field, yielding 30 million standard cubic feet per day and 1,600 barrels of condensate daily, and the Al Mahakik gas field, with a low rate of 0.85 million standard cubic feet mark substantial additions to Saudi Arabia's energy reserves. Beyond these, natural gas findings have been reported in 5 reservoirs within previously discovered fields. The announcement aligns with Aramco's ambitious goal to increase gas production by 50% by 2030 compared to 2021 levels. This diversification strategy extends beyond discoveries, with Aramco's recent strategic investments in liquefied natural gas (LNG). The company's push into the natural gas sector involves a $500 million stake in mid-ocean energy, demonstrating a keen interest in the evolving LNG market. Aramco CEO Amin Nasser underscores the company's commitment to further investments in LNG, positioning Aramco as a key player in the seaborne gas market. These developments reflect a broader industry trend towards cleaner energy sources and Saudi Arabia's proactive approach to securing its standing in the global energy landscape. And moving on, France, Germany and Italy have jointly agreed on a regulatory framework for artificial intelligence (AI), aiming to expedite negotiations at the European level. According to a seen joint paper, the government supports voluntary but binding commitments for both small and large AI providers in the European Union. The European Commission, Parliament and Council are currently in negotiations regarding the EU's AI position. The 3 governments argue that binding rules of conduct and transparency should apply to all, avoiding a potential competitive advantage for major US AI providers. While initially avoiding sanctions, a European authority may monitor compliance in the future. This agreement signifies a step toward unified AI regulations within the European Union, addressing concerns about discrimination risk and ensuring a level playing field for both large and small AI providers. We'll take a short break and return with stocks and commodities. Stay with us. Thank you for staying with us. At the close of Friday's trading session on Nigerian Stock Exchange, NGX, a total of 441,579,078 shares were traded in 5,883 deals, amounting to a market value of 6,032,959,569 naira and 33 kobo. In comparison to Thursday's NGX trading day, Friday's data indicates a 9% decrease in volume, a 38% increase in turnover, but a 10% decline in the number of deals. The current market capitalization of the Nigerian Stock Exchange stands at 39.1 trillion naira. In summary, 116 equities listed on the NGX were involved in trading activities, resulting in 36 gainers and 19 losers. Multiverse Mining and Exploration led the gainers with a 10% increase in share price, closing at 3.63 naira per share, followed by Prestige Assurance Company, Macure Industries and C&I Leasing. On the flip side, Associated Boss Company recorded the largest decrease, closing with a 10% depreciation in share price at 0.81 naira per share, followed by Better Glass Company, The Initiates and J-Paul Gold and Ventures. Jai's Bank had the highest trading volume with 90.2 million shares traded, followed by Guarantee Trust Holding, The Initiates and J-Paul Gold and Ventures. And away from that, at the conclusion of Friday's trading session on the Johannesburg Stock Exchange, GSE, a total of 250,458,108 shares were traded in 321,996 deals, amounting to a market value of 15,467,272,991 South African Rand and 11 cents. In comparison to Thursday's GSE trading day, Friday's data indicates a 27% decrease in volume, a 22% decrease in turnover, and a 19% decline in the number of deals. The current market capitalization of the Johannesburg Stock Exchange stands at 18.1 trillion South African rand. In summary, 307 equities listed on the JSE were involved in trading activities, resulting in 173 gainers and 105 losers. Adcop Holdings led the gainers with a 21.21% increase in share price, closing at 4 South African rand per share, followed by Delta Property Fund, Bricor, and Sasfin Holdings. On the flip side, Eastern Platinum recorded the largest decrease, closing with a 23.33% depreciation in share price at 0.46 South African rand per share, followed by African Dawn Capital, Ellis Holdings, and Choppies Enterprises. RMB Holdings had the highest trading volume with 25 million shares traded, followed by Growth Point Properties, Redefined Properties, and First Rand. And now we turn to the commodities market, where one unit of wheat is currently priced at 468.00 US cents. Gold is trading at $1,980.01 US dollars, silver at $23.73 US dollars, copper at $3.74 US dollars, and Brent crude oil is valued at $80.61 US dollars per barrel. We call it a wrap on the business news this morning. I am Alfreda Ambe-Bassi. Business Insights continues with Adeswa Eramusele.
Welcome back. Thank you very much, Alfreda, for that in-depth business news update. You're still watching Business Insight, and today we'll be, of course, talking business. It's a Monday anyway. What better day, could there be to talk about business than on a Monday? All right, and today we'll be looking at SMEs. We'll be talking on the topic asset management for small and medium-sized enterprises in the banking and financial sector. Yes, and to help us talk on this topic, we have Adebisi Adeyeye, who is an assessor as well as a business turnaround expert, is joining us virtually. Good morning, Mr. Adeyeye. How are you doing this morning?
Yes, good morning. Not Adebisi Adekunle.
Could you unmute your mic or... Okay.
It's unmuted. It's not.
I believe you can hear me.
I can hear you very clearly.
Okay. I would ask this question because I can see here that you are an assessor as well as business turnaround expert. Can you I'm just curious, what does this position entail? What does your role entail?
Oh, okay. So actually, I am why you see the business turnaround expert is because in the line of my career, I have had privileges of inheriting companies that are having issues, companies that are looking forward towards growth. And then by the grace of God, we've been able to do a lot, and then most of those companies come up. So I get invited when I have the time to either consult or work full time in some cases on projects that seek to help businesses recover or businesses to set the right kind of standard systems that they need to run. That's why the business turnaround experts. And then the assessor just simply means that I get invited because of a little bit of my HR background to help companies recruit. So when they are
Mr.
assessing,
Adeyeye, you would have to maybe move backwards a bit so the camera can capture your full figure. Okay, that's much better.
Like this?
Amazing. Thank you so much. So now let's speak to financial planning and analysis. How important is is planning, to assess assets management by SMEs? What do you think, what strategies should SMEs have in place to ensure that, they have their financial analysis put together? What would you advise them to do as an expert in this field?
Okay, so I think we can look at it first from how effectively SMEs should be managed. So one of the aspects of asset management, there are two types of assets that can zero down on the tangible and the intangible. Of course, we know the tangible assets are machines, equipment, and all of that. The intangible assets have to do with probably the internal processes, how you budget yourself, how you manage yourself. Now, if we relate that with what we currently have here, a lot of SMEs run their businesses by the day. They run their businesses without a proper financial outlay. One of the things that the honesty that you can bring to a starting business is to know the amount you are investing in it, and then do a spreadsheet, do spread out your financials, what expected profits you are able to make, and then when you are going to break even, when you are going to expand, when you are going to replace some of your machines, when you are going to do a lot of things that is always in the financial outlay. Now that is missing. Insurance also is equally missing in most of our SMEs because we don't have a culture for all of that. Tony Elimelu just gave an analysis a few weeks ago about how we just don't take insurance seriously, and we're a growing economy. Things happen by the day, unforeseen, and all of that. So SMEs and their SMEs must begin first and foremost to look at. If you just look at the debt of most SMEs, the bottom line of it is that their financial records were poorly handled. Even when the banks failed, what happened in the failure of the banks, even though they are not in the category of SMEs, you will trace the failure of some of these businesses to improper financial documentation and projections. So when a business is starting and you don't project properly, you are going to run, because now in a kind of economy that we are running now, it's very volatile. So if you really don't plan, you will not be able to take the shocks that all of the floating of the dollar, all of the inflation rate has brought in. These things were not foreseen maybe 2-3 years ago, but they are here with us and we have to deal with it. So the smart ones that have taken care of all of their financials can either cut down on some costs that are not necessary, expand their production to take care of the sudden shocks, and then grow. Most SMEs that I have come across, they have a vision and a mission, but in the real sense, they are not even able to pursue any of those because they just want to do business. That is one part of it. The other part is the government involvement in all of these things. Thank God that there's a tax reform that is going on now. You will just be so shocked how much people have to pay from the local council to the state to the there's so much taxation for businesses that are relatively very small. Businesses that, in my own opinion, government should even exempt so that they can grow. There should be a threshold. There should be a ceiling where you reach before you can begin to take some form of taxation. Now, if you don't plan your financials and you don't take in all of these stagnations, you won't be able to know if from the beginning you're already running your business at a loss. Machines are going to depreciate. When will they depreciate? When will you change the parts? When will you replace them? All of these have to come in for SMEs to make good planning and growth trajectory for themselves. Yeah.
All right. Still speaking on financial planning and analysis. What are the specific strategies? Because you just said it is very important that they do, they have financial planning and strategies in place. What are the exact specific strategies you would advise someone starting out or SMEs generally in Nigeria, to actually put in place? What are the exact strategies? I want to know the exact ones so that people can, have that understanding.
Okay, so this is it for me. First and foremost, there are so many asset management consultants, and they are not as expensive as people think they are. You can approach one of them to really advise you in the sector that you are investing. First, you must understand the sector you are investing. Know the people you are competing against. If you are starting an SME in a sector that is already saturated, you are going into a place where you have to struggle for customers, you have to, but enjoying it down to specifics. One, first and foremost, have your budget plan. If you draw up a budget plan, this is how much I am using to start up this business. This is how much I'm going to use for machines. This is how much I'm going to use for securing my space. This is how much I'm going to pay myself and whatever number of staff I will be carrying on as salaries. Now, when you have done a part of this, you will now be able to say, what level of output, profit do we need to make to sustain this figure? Because at that point, you will have a figure, you have a number. So you already see that you need to produce XYZ quantity of whatever you're setting out to produce to be able to return on this investment. Now, you might not be able to start making profit. It's possible, but the truth is that most times you have to be honest enough to say, okay, if we continue at this rate, we are investing 10 million in this business, but we are not able to make more than say 200,000, 300,000 profit after tax. So we will need to keep running at this stage for 3 years before we break even, and then we'll start to climb. Then we can do a little bit of expansion. So first and foremost, you must identify your business, know your competitors, know where to site your business, know the cost of equipment and your overhead costs. Then have a running budget to follow through on this. When all of that is done, you can begin to track your assets, document them, you can begin to regularly maintain, you can choose to invest in technology, you can do all of that. But first and foremost, you must be very clear about what you want to do and what capacities you have, and then have a budget that will run that. Yes, now for the picture that is on the screen, those kind of businesses, yes, they are small businesses, but they can grow. And we have seen growth in some of these areas. People start off with probably plantain, and then because they got help, they are able to start running plantain chips.
Okay, I don't know
Now
if you can
for
still hear me.
fashion, let me talk a little bit about fashion.
We are talking on asset management for small and medium-sized enterprises in the banking and financial sector, and that is the topic we are addressing today. And our guest joining us virtually is Adebisi Adeyeye, and is still with us. I don't know if you can hear me now. Mr. Adeyeye, can you hear me?
Yes, I can hear you. I can hear you. I hear you very clearly.
Okay. I wanted you to finish your train of thoughts before. I think there was a little bit of network glitch right there. So you spoke on government involvement in SMEs and all of that. What do you think the government can do differently? Because we know that SMEs are like, in fact, they are very, very crucial to economic growth as we speak now. They make up a very large fraction of our GDP. So what do you think the government can do differently to encourage small and medium-scale enterprises here in Nigeria?
So this is it for me. I think government is, they are a little bit elaborate about these things. And then because they are a little bit elaborate, shows that they might not have a clear understanding or they deliberately deny themselves the understandings that happen if you talk of small, medium enterprises. Now let me talk about the fashion industries. I have seen government in different places train tailors if they really train them, and then they line them up in some school fields, and then they give them one sewing machine and maybe something else. And then in their mind, they have empowered these people. But you know what they've done? They've only created more problems. And I'll tell you why. Most of these guys that you give these machines to, at times they give them industrial machines. How are they going to power these machines? How are they going to rent shops? At times they give them startup kit and maybe 100,000 naira. We all know how much shops cost. And the moment you open a shop, for instance, you are going to start paying all the taxes involved. Now, the best approach to this, let me even tell you what some of them do. The moment you give them, they take those machines, they sell them, and then they go and buy Okada or something that can give them daily money. Because somebody who is starting up. But the truth of the matter is, if you really want to grow SMEs, you must use the cooperative approach. If you train people and then you cluster them and then you form them into cooperative societies, and they are guaranteed by all of the forms and all of that. And we have a lot of officers who are trained. There's a federal cooperative college in Kaduna. They are chunking out graduates who understand it. Once you form them into cooperative societies, they are going to survive better, because then they can do joint ventures amongst themselves. This person is a designer. They can then rent shops, and then they can spread their cost. And you will go a little bit further. For instance, now I can readily tell you that school uniforms in Nigeria, we will be doing over 50 million yards for school children. I mean, all our schools, they wear uniforms. Who produces these uniforms? Who sew these uniforms? Just imagine if even at the local government level, you cluster these people together, you enable them to have access to all our microfinance banks. They have access, and then the microfinance banks too will have officers who will check their books, keep the trainings up, help them to source for businesses that they can use to grow. By then, you are multiplying. If you go to Bangladesh and some of these countries that are doing a lot of things we wear in Nigeria here, you will see that they use this approach very, very well. And then they use this cluster approach. So you see a cluster of tailors, you see a cluster of weavers, you see a clusters of body makers. I think in Aba, you will see something that's similar to that approach too. And it works perfectly, because at that point, cost is spread, and then they can make profits by co-joining their businesses, by doing their business together. But empowering individuals, they won't survive it. They cannot survive it, because the overhead will be too much for them to bear, and the business will die even before it starts. So government needs to come and reappraise their approach, and then come closer to the people, maybe through the local government authorities or a ministry that can really come close to the people, bring them together as a group, form cooperative society, help them to access funds, keep the trainings up, and above all, help them in the areas of business development, so that you can help them go to market until they are able to sustain themselves in the market. My opinion.
Very much for that opinion. And now let us touch a little bit on risk management. You've already said a little on it already, but let's go in depth now. What are the potential risks SMEs face in a country, in a developing country like Nigeria? And what do you think? What would you advise should be done to mitigate this risk?
Okay, so one of the first risks that you can readily see among them is debt. There's a lot, some of them access loans, some of them borrow money to do these things, and then because of all of some of these factors we have discussed, they are not able to pay back. So first, there's a risk of capital. There's another risk of equipment, because insurance is, we don't take insurance seriously. And it's necessary. You can insure your business against theft, both intellectual and even property. You can insure against fire and all of it. So they still take this kind of risk by not going a little bit further. You don't really blame them. It all boils down to, how do I put it now? It all boils down to the caprices within which they can play with resources and funds. Another risk is going into the wrong business. You go into a business that's saturated, or you go into a business where the big players have captured the market, you are most likely not going to survive. And another risk too that we have discussed, but I can bring back, is not planning yourself. not having a proper book of record. Because what it means is, just imagine that you are doing a business with 500,000 a couple of years ago, maybe 1 year down, 1 year ago. What was the inflation rate? Now, inflation rate have come, costs have doubled, and the purchasing power or share of pocket of the average Nigeria is under pressure. So what does he do? He needs to cut down on the things he's consuming or the things he needs, and then this will trickle down to businesses too. So this equally a risk, and then there's a risk of not banking your money. A lot of some of these SMEs just bring in money and they don't, they don't bank it. I think, you see, banking helps a lot because it enables you to have a picture of how you spend your money. So you can call up a statement for 1 week, 2 week, and then you can see some of the costs that are not necessary that you have actually subconsciously expanded.
You've highlighted the risk. Now, can you give us all strategies SMEs should adopt in order to ensure that they don't become victims of this risk, given the challenges and limitations in different, industries?
So, I mean, first and foremost, SMEs should look at how they can synergize. There's need for synergy. SMEs must look at how they can bring resources together, talk to themselves. I mean, for the very small ones that are struggling, talk to themselves, form themselves into cooperative societies, and then get an expert that will help them if they don't have that capacity, that will help them with their budget planning, asset management, and all of this. That will help them to start, and that will help them to be able to grow at a reasonable pace. So there's somebody that is guiding the business. Secondly, at times it is better to start small than to start big in an undefined market. How do I mean? For an SMEs, if you want to go to market, if you have done your study very well, it's better for you to start gradually, grow your customer base, maintain them, begin to expand, and by expanding your customer base, naturally pressure will now will force you to expand your business. So you don't come into the market and then you spend so much and then you are struggling to enter or capture the market. But above all, I just advise that SMEs should come together. We have to decisively help them to come together, form clusters, and spread the cost of running their business above board, across board.
All right. Now, what is the role of technology, in all of this? How can technological integration enhance the profitability of this SMEs? And what technological tools specifically would you advise they go for? Okay. I think we lost Mr. Adeyeye. Okay, I hear he's back now. All right, Mr. Adeyeye, did you get the question?
I think it's network, but I'm here. I'm hearing. Yeah, I'm hearing you. Yeah. So you were talking
Okay, I
about
can't hear you in the studio.
technology.
All right, before we move ahead, let's go on a quick break. When we return, we continue with this conversation. Stay with us. All right, you're still watching Business Insight, and we still have with us our guest, Mr. Adebisi Adeyeye. Mr. Adeye, are you still with us? Okay.
Yeah.
All right. So, still on technological involvement or integration into the productivity of SMEs. What would you say about that, and what are the specific technological tools or platforms you think would be beneficial to SMEs?
Oh, I think the social media as a platform has really done so well for some very smart business owners because it's a global space and it costs very little. So a lot of them that are smart have used some of the platforms, the Instagram, all of those other platforms to engage audiences, get customers on board, and do a lot, so much in terms of customer acquisition, even in terms of sales, and even getting your products to the customer now has been made very easy by all of the delivery outfits that have sprung up all over the country and globally. And so there's no boundaries now, which means you can really start up as an SME and then grow your customer base. Although there are tools like the CRM tool, the customer relationship management tools, there are apps that you can really use to coordinate your customers. You can use it to keep a relationship with them. You can use it to get new products. You can wish them happy birthdays. You can just keep them close to you and run your business. And then, so technology is the way to go. That's the truth. Even within the most various industries now, equipments are being replaced by simpler ones, which means that it's just easy that, for instance, if you want to build a textile now, nobody's going to build the kind of mighty kind of textiles that you have, looming machine here, there. No, no, no. It has already been disintegrated. So you can just take a sector down the value chain, and then you sit right there. Maybe you are very creative. So you just do designs, and then you get an interject machine only that or you need your designs. You print this kind of design, get them registered, and then you are in market, you do your business. So technology will really help. This SRM, the social media, and all these other apps that in businesses are really good to help SMEs grow their business.
All right. Now, still talking on technological involvement, what would you say? Because there are some, just like social media, like you rightly said, posting your business on the social space and all of that. Sometimes there are also risks involved in all of that, because sometimes the social media platform can block your account, or something might just happen. It can be hacked, so different things happen. So what would you think are the practical ways in which SMEs can protect assets, protect their assets from, going down the drain? What would be your advice in that regard?
So there are so many layers of registrations that you do when you're starting up a business, from your business registration, your business premise registration, your product registration for intellectual protection and all of that. Yes, social media can really just become it has its own risk. But the truth of the matter is this: your approach to the social media is most likely going to be sourcing for customers and then putting your content out there. So you can and that's why I mentioned the CRM, that you can build a customer base from the social media, and at the same time as you are building the customer base, you put in place things that will link you directly with the customers. So the customers on board on your platform, on your network, and they are dealing directly with you. I've seen people scammed actually from seeing somebody advertise something on social media, and then without verifying, they go do business, they get scammed. Yeah, but once you put your name, your registered name out there, if anybody dares to counterfeit it or the rest, then you have the right to legal actions. But I mean, if you put your name out there and you link with your customers directly, you reduce that risk, and then you can protect your customers and they do direct purchase to you. And then you already will have put all the caveats you need to put, that please do not do business with anybody using this. I mean, you put all of those things in place, and you can do your business. I mean, that's all we have for now to protect. First, try to protect ourselves before we can get the law, what the law says. But because of the complexity of the long haul of the law, and we're
What
talking
are
of
some
small
of the
businesses here,
key
first you can
regulatory
protect.
compliance challenges that SMEs face? And how can they ensure that they adhere to these regulations to ensure that they don't run into trouble with the law or government?
So it's simple. You want to be law abiding, be law abiding. You want to. That's why I started by saying that you want to start an SME, get all your facts on ground, all the regulations, the registrations that you need to do it. Stand on the path of the law, because at times it is even the violation of some of these regulations that deny the SMEs from accessing loans and government help to them. Because by the time you see some of the monies made available by government, fundings made available, some of these SMEs cannot access it because they've not done their due diligence. So it just makes a whole lot of sense that you want to start a business, get it registered, get all you need, because different businesses have their lines of registration. If it's a liquor, you get a liquor license. If it's a restaurant, you get a consumption. I mean, all of those kind of licenses, you get your VAT number, and you make sure that you comply. And that is why I equally advise that they should use the bank, so that once you have registered your business and you have a bank, your business registered with your business name in the bank, you can, I mean, your taxes and all of those regulations, you can pay them with ease, and then it's documented, and then you are safe. And when you have all of this in place and you have demonstrated for 2 or 3 years, you can access some of the government funds that will help your business to grow, because you will have shown consistency, and you will have shown law abiding behaviors.
Okay, so how can this small, medium scale enterprises, have some kind of relationship with banking and financial institutions to ensure that they can access loans and other benefits from such institutions?
Yeah. Okay, so first and foremost, if a particular bank is not advertising specifics, like I don't want to call banks. Some banks focus on fashion, and then year in year out they do big things in fashion. If you're a fashion designer, you should pay attention to those kind of things. Visit the place and see what they have to offer. Or better still, go to a microfinance business, walk into any of the licensed microfinance business and tell them what your business is like. They have business development managers there that will sit you down, help you even with registration, help you to put your documents together. And then when it comes to accessing funding, some of those microfinance banks will actually help you to put your documents together to access those fundings, either from the Bank of Industry, from the Ministry of Agri, and all of those NASA, of those intervention agencies help SMEs. And I can readily guarantee here, because I've seen it happen. Those who have their documents intact and have a track record, they access this loan even without knowing anybody.
We would have to draw the curtain on this note. I don't know if you have final thoughts. If you have final thoughts, you can just do that in 1 minute so we can wrap up.
Yes, I just want to say that SME remains one of the biggest sectors that can unlock our economy, but government needs to really pay attention to that sector, help them to form cooperatives, help them to access some loans, and help them to go to market. And you will see what that will do to our economy.
Thank you very much, Mr. Adebisi
Adeyeye,
for joining us on the show. It was amazing having you.
Thank you so much. Welcome.
All right, and on that note, we draw the curtain on Business Insights today. Many thanks for joining us. Business Insight makes a return tomorrow. Join us then. I'm Adesua Iramosele. Bye for now.